Hi folks, James here. Welcome to Super Sunday. I'm going to do a quick rundown of the charts. Remember that you can catch me live every morning at 8:30 a.m. Eastern Time on Olive Prime TV, and you can catch me straight after that on my own show here at ArcisFX. So make sure you subscribe to this channel, ArcisFX, and click the like button for this video. And also go across to Olive Prime TV, that's HOLA Prime TV, and I'll catch you there weekdays, 8:30 a.m. Eastern Time. All right, let's get into the charts, and I'm going to start with the crypto charts. I was very pleased to see that Bitcoin held its own on Friday. And this is a very quick summary, folks. Please make sure to catch me in the live streams for detail on these analyses. And if you can't catch me on my own live stream here tomorrow, then get me on Olive Prime TV. So we did have that clear out through the bottom and through the 20-period moving average here on Bitcoin. My position hasn't changed. I'm DCA'd in at about 85K. And I'm 30% hedged. This clear out through the bottom of what apparently is a bull flag is pretty typical of Bitcoin. You see it does it time and time again. There's another clear out through the bottom there, and we see it every time we sort of form a range. We saw it over there too. So very typical behavior, and Bitcoin's behaving pretty well and pretty structurally, soundly technical. So I think the next leg up is due this coming week, but do allow for another week of sideways movement. We do see this on Bitcoin recently these days, and the targets are up here based on the projections from this technical pattern at about 136. I've been watching Kitco News this morning, and some think that this could go even higher in this current cycle, up to 160,000, which is a 50% extension of the move from the top here, but it's also the 1.618% Fibonacci extension of the greater move from the bottom. I'll probably hedge a little bit more at about 135, probably another 30%, bringing me up to a 60% hedge, and then I'll probably hedge the entire lot at the top here at about 160. So that's Bitcoin, and that's going pretty well. And of course, Ethereum and XRP going well as well. And I think Ethereum has now sort of completed this first leg of the pattern. That's the bull flag run up, bull flag, and the extension. We've also reached the top resistance line and the top of this very, very long and wide triangle pattern, which we're busy trading in. So if we are going to turn around, it should be about now, and we should or could head down to the center of the triangle at about 2,600 to 700, or maybe even down to the bottom of the triangle, all the way back down below 2,000. I think that's probably very unlikely at this point, but be very careful. We may see some reaction and rejection here. And this is definitely not the place to be loading up on longs, so be careful. I've got a relatively small position. I did add a little bit more over the weekend. We'll wait to see how that plays out. Any dips on this might be an opportunity to reload or even potentially hedge. And then on XRP, I also have a long position on here. I actually started well below at about $2, and we got out most of it during this sort of consolidation phase. But I added a little bit more on back down on the dip to the 20-period moving average, and I alerted my private group on Friday that we'd add some more here, where we added Ethereum at the same time. Going across to gold, go and check this out on X. I put a poll up there, which is an interesting poll. About 300 or 400 people have already answered, and the general idea from X is that out of these three paths, the most popular path is A, quite significantly popular, about 60%, followed by about 25% for path C, and the least popular path actually now is path B. So I'm going to go with the least popular view. It's actually my most popular view, that will break down to 3120 and potentially even $3,000, the big round number, this under over support and resistance level, and the 200-period moving average. So I'm oscillating between B and C, but I think path A is equally valid. So I'd probably assign about a third to each one of these paths. And if I were to pick one, probably B. We'll wait to see how this goes when we open up a little bit later on today, but I'll show you my positions. We got short there at the top of that candle. The reason for that, because of a retracement back to the 20-period moving average on the 4-hour chart right there, and we've moved down ever since. I did hedge my position right at the bottom of this triangle. You can see we got a large rising ascending triangle, which is a bullish pattern. We sold at the top there, not because it was the top of a rising ascending triangle. Of course, it's a bullish ascending triangle with a 65% chance of breaking out through the top. I was waiting for that. It didn't happen. And the price action over there prompted me to sell. By price action, I mean the sort of very short-term price action. You'd have to go into the 5 or 15-minute charts to try and have a look at that. See if you can read this tape here. All sorts of interesting stuff happening at that point, which prompted us to go short. And I'll talk more about this in the live stream tomorrow, because I think it's quite an interesting topic that I'd like to discuss. Nevertheless, we're out of that trade now, and we're currently hedged. I've locked in that profit. And I'll be watching this very, very closely to see the reaction. I'm well positioned for any one of these paths, A, B, or C, because we've got profit locked in and we have no risk on this trade at all. But we'll have to wait and see how we open up in a few hours' time. And at the same time, I'm long on silver and wondering what to do with this next. There are entry positions stacking up all the way from the bottom, bouncing off this sort of trend line and the moving averages. Bit of a pull down yesterday. And depending on what gold does, this is going to have to follow suit, I suppose. If gold does carry on moving down, I expect silver will pull back. We'll be looking for this sort of path to rebuy. I'll probably hedge and lock in the profits on that one, or maybe even just take profits and wait to rebuy. And we remain short on copper. I got short there at the top of the candle on Thursday. Friday we moved down a wee bit, a bit of a bounce back there afterwards. And I think we could get copper moving back down to some of these moving averages, maybe the swing low at about 538, 540, and potentially even down to about $5. But I'll probably be hedging or taking profit if we get down to about 540. I may even consider reverting to long if we do get back down to that level and we see some reversal candles. I want to go across to currencies quickly. I'm still short of mind for the US dollar, and although the dollar moved up a little bit on Friday, you can see the pound dropped off. The euro held up pretty well actually. Bit of a slump in the pound. That brought down the pound yen. I'm short on the pound yen. The euro yen just ticked up a bit because of euro strength. And I'm long on the great British pound against the US dollar. You can see my two entry tranches. One is now out of the money, one's still in the money. And we're also short on the dollar yen. Bit of a poke up there as well on Friday as the dollar gained a little bit of strength. There's our short position at channel center line. We just bounced back up to the channel center line on Friday. Generally, I think this is a bull flag which will break, and then eventually we'll get down through this very, very important and key support level en route to 127 down here, and then potentially down to 120. I think we'll see continued yen strength. In other words, the dollar yen and the yen crosses dropping off. Let's go and have a look at the equities. Not much to say really. We're just melting up. We're long on the NASDAQ, long on the S&P. How far these can go up, I don't know. But they're moving up, and we have to be long because the market's long, and we have to go with it. We don't want to be top selling or picking tops, just as much as we don't want to be catching falling knives at the bottom. We don't want to be picking tops. So projection above us, pretty simple really. You've got a Fibonacci extension here at 23,900 and the channel top line. Let's have a look at that. There it is there. That's an obvious target. And then above there, we've got higher levels further up. There's another level right up here in the yellow blob, which we could get to in extremis, and that's at about 26,000. But so far, there's no sign of this turning around, as there isn't on the S&P. And I don't know how far these can keep going. Obviously, these are, just a little bit nuts, a little bit crazy. And I've got a line drawn here on the S&P too. Could we see, and are we in the start of a sort of an exponential blow off top, which could take the S&P up to this Fibonacci confluence 1.618 and the 2.618 of a shorter move and an exponential move up into that zone at 6,800 on the S&P. We're currently trading at 6,400, just a few pennies below. So long on both the NASDAQ and the S&P. We're also long on MSCR, strategy, Tesla, looking to buy Alphabet, Google, and NVIDIA. We're actually short, which is interesting. And we have not broken through that top just yet. We tried for an island reversal, but it didn't work out because we trickled down rather than gapping down. And of course, this looks a little bit bullish. I'm hoping for a move back down to this ascending triangle breakout and flat top and the 50-period moving average to consider resuming the long direction, but we'll have to play that by ear if and when we get there. But it looks like currently we're moving up and not down. So going across to energies, natural gas we're out of altogether. We've been trading the continuous ETF here at Pepperstone, and our last trade position was long from the bottom, pretty close to $3, 305, and we got out at the 20-period moving average on Friday. This is the 4-hour chart, looking a little bit weak. Tweezer top over there with a big bearish engulfing candle. That dominates this little section on the chart. And then the penultimate candle on Friday was also very bearish and very engulfing and very tweezerish. So we've got a double tweezer there, a double tweezer there, all under the 20-period moving average on the 4-hour. And I don't know what will happen next, but we're out of this trade. And perhaps we'll gap down over the weekend, or maybe we won't gap at all. I don't know. But my general idea is if $3 holds, and I think we'll have to visit $3. That's the black line below us down there. If that holds, we should bounce up, and I think we'll be moving back up to $4. There are a lot of people that think that we could be moving closer to $2 before we get to $4. And I don't disagree with them entirely. I'm just going to switch across to the futures chart, and I want to show you that we do have potential sort of breakout of two patterns to the short side. Let's have a quick look. This is the Henry Hub futures price offered by Black Bull Brokers, my broker. So this is the futures, the front month that's already rolled over at my broker. Look what we've got. We've got a sort of potential left-hand shoulder, head, right-hand shoulder. It is very skew and lopsided, not perfect. But we've also broken out of this rising bear flag. There's the move down. It's denoted by these two red parallel lines. We've broken down through the bottom. If we take the flagpole leading into the bear flag and duplicate it and place it at the end of the bear flag, starting at the top, which is actually where my right shoulder label is, we should get down to 2.6. That's a measured move based on the bear flag. But based on the head and shoulders pattern, we could get a lot lower. So I think $3 is the key. Let's see how we open up. Where will we be in relationship to $3? And I think that's where all the action is going to take place. We could have already formed a bottom right here at 305, 302, but we won't know that until the market opens up later on today. So let's see. If we have a big gap up, we may have to start looking at the long side again before $3 is revisited. We also got short on WTI oil late on Friday as we revisited the zone. I sort of telegraphed this pretty clearly, and in many places I said if we got back up to the 20-period moving average or the 200, I'd be looking to resell, which we did. We got up to the 20-period moving average and I sold right there at about 65.90. We're currently trading at 64.60, so a little bit of a profit on that trade already. And my projection for this is a move down back into this block at around $60-ish, and then below there down to 55, this double bottom through the channel line, which I've got to change color. Okay, that's better. I had my chart set to black backgrounds. I hope you're enjoying the white again. I certainly am. So there's that double bottom where we bought last time. I think we're heading back down towards there. We were short before, as you know, at these tops and so on, which we hedged on Thursday and then we resold on Friday. So I think that's energies basically, folks. Quickly on uranium, we're still long on UEC, no changes. We're approaching and have probably succeeded breaking through that top, and we still remain long on UEC. Target's probably about 10, 12, and sort of blue sky above us. I don't really know. And then I'm looking to get long on URA too. We haven't had the chance to rebuy. We got long right at the bottom. We got out at the sort of intermediate top, and we missed out on that last little bit. I was hoping that this would carry on back down to the 200-period moving average, close that gap for a rebuy, but we've just moved up so far. In any case, we've got plenty of longs on UEC, the other uranium name that we're trading, so we're all good on that so far. And I will continue to look to buy dips on URA if we get them. Don't start buying now, folks. It's not the right time to be buying uranium, any of them really. They're all a bit overextended. Let's go to TLT, the VIX. VIX dropping down. No plans to buy any yet until we get into the green block, and preferably closer to the bottom of the green block. Last time we bought was over there, and we got out in the sort of mid-20s. I'll be looking to do the same again. The only thing I ever do on the VIX is buy in the green block towards the bottom if I can, and then exit in the mid to high 20s, maybe into the 30s. Once that's occurred, I just wait for the next time for that to happen and rebuy like we did there. That was quite a long time ago, about a year ago. So that was, I think we actually got another position long over here. So we probably took 2 positions last year on the VIX, that's all. We're still long on TLT. Our last tranche added below us, which is good. At least we're above it this time. Struggling to get through the 20 and the 50 here. We've still got the 100 SMA, that swing high, and then the 200, and that swing high, and that swing high to get through before we even get anywhere near 100, which is probably where I'll look to exit. Swing across the softs and grains. Sugar, we remain long, no changes. Cocoa, looking to add some more shorts to this. We've moved up to the trend line. If you're not short on cocoa already and you seek to get short, this might be a good place. Just above the channel center line and just underneath that falling trend line. And the projected path remains the same, no changes to that. Maybe a chance to sell if you haven't got a short on that. I remain short on coffee, having added one more tranche over here at the channel center line. And I'm willing to add some more at the channel top should we get there, but we are moving down so far. We're also short on orange juice, long on cotton, long on corn, long on wheat, all sort of dribbling around. And then lithium, as I keep on saying, is lit. And I want to get long on lithium on a pullback to one of these trend lines. Probably around about $40 to $42 to $43 if we can get it. I'll be looking to get long on lithium, the LIT ETF. And that's it, folks. No changes apart from on crypto right now because it's the weekend and nothing's really happened since we started the video. Well, thanks for watching, folks. If you enjoyed the video, please give it a like and subscribe to the channel and look at some of the links below. There's some awesome free goodies for you which you can click on, and I hope to see you around in the next video. Take care.
On the outside, hedged on the inside. He don't roll with the herd. He curls up, analyzes, and hits the trade with equality entry. Let's go! I'm James the Hedgehog, sharp with the spread. Spikes on my back, Bloomberg in my head. Small frame, big brain, live on the floor. Running these charts like a four-legged law. Delta neutral when I strut the ring. Arbitrage flex.